Surprises, where Brexit and a Trump victory took the world by surprise. Prime Minister Narendra Modi's demonetisation move shook India as well. CNBC TV 18's Udayan Mukherjee caught up with Krishna Kumar, investment director of Eastspring Investments, and began by asking him what he thinks of the year gone by.
It has been a tough year. I mean, the global environment has not been favorable, and everything has been, bobbing around a little bit here and there. Looking into the next year, I am less hopeful because, things the way they are shaping up, it is not helping either the Indian cause or the way the Indian system is going forward. We've done a few changes, there are a few corrections, there are a few remedial measures which have been taken. But honestly, I think it's going to be a very tough year going into 2017.
Do you think it's only the first part of it, Krishna, which will be challenging as we wade our way out of this demonetization thing? Or do you think even in the middle of the year, once GST starts coming in, that will present some challenges as well to the whole system, which might be another headwind for earnings to recover as we were expecting this year, but which did not happen?
You see, the way I think about this is not about demonetization, GST. These are measures which are constructive. These are measures which are possibly going to have a more substantial benefit over the long term. The moment you say over the long term, you must understand there is something in the short term which we miss. The point that I'm thinking about is when you take a step forward in terms of corruption and you want to address it systemically, the impact is far longer than you can imagine. The only case in point stroke reflection that we have of this nature or size is China, when Premier Xi Jinping took the step of taking corruption or rooting corruption out of the system. He started in 2014, and trust me, it has taken him 3 years, and all these measures take a long time. Now, GST is equally disruptive, and there is going to be a lot of informal businesses which are going to be brought into the formal setup. So when I say disruption, the informal business coming into formal business will render a lot of them out of business. So, you've got to think about these two things when you think about whether it's the first half or second half. Honestly, I'm not very sure whether it's a 3 or a 6 month kind of a window when this corrective phase goes through.
What's the global backdrop, Krishna? What's the sense you get when you speak to your end investors? Because in the last month or so, it appears that the big boys are running, the US, Japan, and people don't seem to have that much mind space about emerging markets with the way the dollar, the US bonds, and the US equity markets have moved. Do you think we could be overshadowed? I mean, people will not spend enough time looking through the pain in a small market like India when there are gains to be made in their own market?
Yeah, I mean, see, think about it. The dollar trade is a consensus trade. The dollar trade is the safe haven trade, and that's kind of getting completely consumed. And people are, shedding other currencies and moving into currency which is more safer. Is that overdone? I wouldn't know. But the important point which I keep hearing from investors is they are very reluctant to buy country funds. So even if they want to buy, they want to look for Asia funds, and they want to look broad-based, investing styles. So they don't really look at country allocation, which is now increasingly high risk for multiple reasons. One is the economies are not very strong. Second of all, the currencies are very volatile, and they've become extremely volatile in these kind of conditions. And in the process, the allocation for country-dedicated funds is increasingly minimal. And so the global backdrop, as it appears that the appetite for a single country fund is very low, and partly because of their own doing, and partly because the dollar is obviously a better hideout.
So in 2016, we hardly got any money into the country in terms of dollar flows, FII flows. Do you think 2017 will be more of the same?
My sense is we get allocation into Asia funds, and Asia funds then allocate into India. And we've seen some flows. We have been on the lucky side where we've seen very strong flows this year in 2016. 17, we have got early signals that we will get more money which will get allocated to India stroke Asia. But that doesn't mean much. It's like India is a very large market and you need lots of money and lots of interest to kind of provoke a larger allocation. India is also not very cheap, which makes it more difficult for India to receive any money at all. And in the backdrop that you can see with the other emerging markets, India is the most expensive market and it's pricing in a lot of growth, which is obviously very elusive.
You are using the word expensive after a fairly significant correction in stock prices. I mean, and maybe not at the level of the index yet, but you know, after this demonetization thing, a lot of consumer-facing franchises, etc., have corrected, but not significantly enough yet, in your book?
No, I don't think so. You know, there are multiple issues here. First is India is a growth market, and we price in growth, pay multiples, whatever it is. When growth becomes elusive, this market should possibly trade lower, and the effective outcomes could be multiples which are significantly back to the median levels or maybe one standard deviation cheaper. When I say that the correction which has happened is hardly a correction, if you think about it. We've not seen any growth in the last 2 years. We don't see much growth in the next 2 years. At least for the next 12 to 18 months, there is not too much growth which is being factored in. Consensus numbers are still sitting up there, which will need to be kind of downgraded. If these things happen, you know, the best outcome would be possibly, you know, a flattish market, which is very seriously optimistic.